one fund. On point for today, the expert to talk about it. This is the ETF of the week. Yes, welcome to the ETF of the week, where we get the latest take from Todd Rosenbluth. He's the head of research at VettaFi. And if you go to VettaFi.com, you'll find all the tools you need to be a savvier, smarter ETF investor and to get more details on the new, newsworthy, trending, and timely exchange-traded funds that we discuss here. Todd Rosenbluth, it's great to chat with you again.
It's great to be back, Chuck.
Your ETF of the week is
the Capital Group Dividend Value ETF, CGDV.
CGDV. This is the Capital Group Dividend Value ETF. And I have to say, Todd, regardless of anything you're about to tell me, I think this fund does something that no other ETF of the week has ever done in the entire history, which is now almost 14 years, which is this fund gets perfect marks from VettaFi's competitors. It's a 5-star fund from Morningstar and Lipper. The Lipper Leaders has 5 categories. It gets a 5, the highest mark in all 5 categories. So this fund, by every measure, is a superstar. So why is it the ETF of the week now?
I guess we could just end there if we wanted to, but we typically do a 8 to 10 minute segment. So let me tell you a couple of things that caught my eye about CGDV. This is one of those funds that Capital Group launched 4 years ago when it entered the ETF marketplace. It now has $30 billion in assets. It's now among the largest of those actively managed ETFs, despite launching much later than many of the products. You mentioned the track record. That's how Morningstar is giving it. It's a 5-star. Its track record has been great. We've seen value and value strategies creep more into the mindset for advisors and investors to start 2026. We've seen dividends be more relevant in 2026. This is an actively managed strategy that combines both those characteristics, but is well diversified. We'll talk about the underlying holdings in a moment, I'm sure, but a strong track record from an experienced team that is well known for active management outside of the ETF wrapper. Capital Group caught my eye, and excited to be able to talk more about this ETF.
Yeah, this fund, I mean, its performance, it's got only 3 full calendar years under its belt. But in that time, it's number 1 in its peer group. And oh, by the way, it has been top 10%, top decile in its peer group, which is large cap value, in each of those 3 calendar years. So this fund has been killing it. What is the methodology that stands out? Because large value is a big category. It is tough to rise to the top and stay at the top.
So this is actively managed. Dividends are a part of the criteria. Valuation is, of course, a part of the criteria. That's not all that different from what we find in many actively managed mutual funds. This is now a strategy that exists in the ETF wrapper. So there's some growth characteristics as well. And when I look at the holdings, I do see Microsoft and NVIDIA. Those are widely held stocks outside of the value spectrum. But there's Eli Lilly, there's British American Tobacco, so a non-U.S. company in the top 10 holdings, Royal Caribbean Cruises. So you're getting some stocks outside of what you find typically within the S&P 500 or even just the S&P 500 value strategy. This active characteristics, Capital Group has a team approach to sorting through and running a strategy. So proven track record, well-constructed portfolio. It stood out, and I think it's likely to continue to gather assets as more and more people get familiar with this track record.
If there is something that would be disappointing as I looked at this fund, it is actually the yield. Because if you hear dividend value, you're thinking, give me a big dividend. But this fund is not a particularly high yielding fund. In fact, it has a sister, which is CGDG. That's the Dividend Growers ETF. And that has a higher SEC yield. So how are you suggesting someone use this? Because large value is something that most people have covered.
That's true. So the way that this fund is thinking about dividends, it focuses on companies that are paying dividends or have the potential to pay dividends. So this is not focusing on high yielding dividend paying companies. There are other ETFs for that, both active and index based. This is not even, as you mentioned, CGDG, which is another great ETF that's looking at the growth characteristics of those dividends. This is companies that pay a dividend. That's a quality characteristic to me. I find that people are increasingly turning to active management, as we've talked quite a bit on this show, for active management to get their core exposure. Even though this is value in its name and dividend in its name, this to me is a large core / large value strategy. So if you're looking for an alternative to the S&P 500, you want the benefits of some global exposure. It's 90% US, roughly 10% that's non-US. You're looking for the active capabilities, and there's some concentration. I think this portfolio is roughly 50 stocks overall, as opposed to obviously the 500 plus stocks that you'll find within the S&P 500. This is a great way of having it within a portfolio in a low cost manner. And apologies of getting ahead of where you might go next. You mentioned the Lipper leaders earlier. 33 basis points is quite competitive for a fundamental actively managed ETF or an actively managed anything within the equity space. So Capital Group is really using its scale to its advantage to make this a cost effective or cost affordable ETF.
You were right. I was going to go towards expense ratio, but I also wanted to go with something else because obviously, Todd, we know you love ETFs. You always tell us you'd rather have ETFs than traditional funds, et cetera. But Capital Group, known for their traditional funds, their funds very popular, long-term, stellar track records, not on all of them, but on many of them. But most people who own Capital Group do it having paid sales charges because they got an advisor who's working with them and they paid for A shares and the rest. Is part of the attraction of this ETF, it's an ETF. You're not paying a sales load to get this management, which you often are if you're looking at some of their other 5-star funds.
That's right. So Capital Group offers mutual funds that are actively managed, as well as ETFs that are actively managed. This being an ETF, CGDV, that caught our eye at VettaFi, you're going to see the benefits of that active capabilities, but within the ETF wrapper. So the 33 basis points is all you're paying. There are no sales charges with this or any of other Capital Group ETFs.
Todd, last question. I mean, obviously, large value, like I said, lots of people have it in their portfolio. So how are you suggesting someone uses? Like, is this compared to what you've got? And if you're not in a tax pickle by making a change, upgrade? Or is this, if you're looking for something to add or you're trying to figure out where to put the Roth IRA money without putting too much or too many large cap value funds? Because I know you don't want people owning 5 things in the same space.
You're right. So I think many people are going to have certainly large cap exposure. They might have large cap value oriented exposure. This is a great fund, CGDV, if you're looking for actively managed security selection on a fundamental basis from a proven firm, low cost, that can bolt onto your portfolio. So many advisors, many investors are turning to active ETFs. This is a great product, a proven track record. Makes a lot of sense to have as part of your portfolio. But if you're quite happy with your index-based large cap ETFs, this might be able to fit in, or this is something to just keep your eye on.
It's CGDV, Capital Group, Dividend Value, the ETF of the week from Todd Rosenbluth at VettaFi. The ETF of the week is a joint production of VettaFi and Money Life with Chuck Jaffe. And I am Chuck Jaffe. And you can find my show at moneylifeshow.com or wherever you search for your favorite podcasts. Now, if you're searching instead for information on your favorite ETFs or maybe your next favorite ETF, check out VettaFi.com, where they've got a full suite of tools that'll make you a better investor. They're on X at Vetta_Fi. Todd Rosenbluth, their head of research, my guest, he's on X as well. He's at Todd Rosenbluth. The ETF of the week is here for you every Thursday. Make sure you don't miss an episode by following along on your favorite podcast app. And we'll be back with another ETF for you to consider next week. Till then, happy investing, everybody.